Welcome everyone. Today we're diving into one of the most powerful and widely used tools in technical analysis, candlestick patterns. Whether you're just stepping into the world of trading or looking to sharpen your chart trading skills, this will give you a complete visual guide from understanding what a single candlestick tells you all the way to recognizing patterns that can signal your next trade. As you can see on the screen, a real chart is already telling you a story. You can spot a hammer, bullish engulfing, and a shooting star. All patterns will be breaking down in detail today. By the end of the session, you'll be able to read all the candles. Before we jump into the details, let's see the roadmap. We have 5 key spots on this learning journey. Stop 1, candlestick basics, where we'll cover what is candlestick, different type of candlestick. Stop 2, bullish patterns, where we'll cover types of bullish patterns that signal bullish reversal and how to trade. Third one, bearish pattern. On the flip side, we'll cover pattern that warn of a potential downturn, critical for knowing when to exit or when to short. Doji, it signal indecision. We'll cover types of doji and how to trade them. Finally, cheat sheet. We'll wrap up with a quick reference cheat sheet and bonus tips. All right, let's start with all absolute foundation. What does the candlestick actually tells you? Every candlestick has open, close, low, and high. And shape of the candle reveals who was in control, buyers or sellers. The first one is bearish candle, where sellers won. Price open at the top and close lower, meaning seller pushed the price down. The body is red. Second one, the bullish candle. Buyers won. Price open at the bottom and close higher. Body is green and tall. This is a candle you love to see when you're in long trade. Third is Doji. Nobody won because open and close are the same price. Buyer tried to push up, seller tried to push down, and neither side won. Market is confused. To conclude, every candle is a battle between buyers and sellers. We need to figure out who took the control. Why do they matter? Charts are not just lines and colors. Every single candle on the chart repeats real human decision: fear, greed, hope, panic. Are traders confident? Are they nervous? Are they about to change direction? This psychology works everywhere, whether you're trading stocks, crypto, forex, or commodities. So, when you master candlestick patterns, you're not just learning a technique, you're learning how to make informed, confident decisions instead of guessing. So, different type of patterns are bullish reversal, bearish reversal, and continuation. Bullish reversal, these appear after a downtrend, signal that sellers are losing control. Buyers are stepping in. This is where traders look for long opportunities. Bearish reversal, the opposite. They appear after an uptrend and warn that buyers are exhausted. Sellers are taking over. This is where traders consider exiting or shorting. Continuation pattern. They don't signal a reversal, they confirm that the existing trend will continue. Whether market is going up or down, these patterns say the move isn't over yet. Second stage in our roadmap is bullish reversal pattern. We'll look into the most used patterns where buyers can enter. So first one is hammer, widely used bullish reversal pattern. So you can see a body over here and wick at the bottom. We do have a small wick upside. So hammer contains small body at the top, long lower wick, little or no upper wick. So what does it tells? The price dropped significantly during that candle. Sellers were pushing hard, but by the time candle closed, buyers came rushing in and pushed the price right back up near the open. The long lower wick signals the entry of buyers. Some key points to consider when you see hammer. The first one is location. It has to be at support zone. Confirmation. Wait for the next candle to close green above the hammer's body. So entry at the close of the confirmation. Stop loss. Place your stop loss just below the hammer. And target would be your next resistance. Let's see the real chart example. You can see the price was in clear downtrend. Then the price reaches at the support level. Right at the support, hammer forms. Next candle closes above the hammer. That signals the validity of hammer. That confirmation candle is your entry signal. Enter at the closing of the confirmation candle or at the pullback. Stop loss is placed below the support zone or hammer low. Target is your resistance zone. Next bullish reversal pattern is the piercing pattern. And this one has a very specific rule that makes it unique. Like the bullish engulfing, this is a two candle pattern. Next, bullish reversal pattern is one of the most powerful two candle pattern. Unlike hammer, which is a single candle, this pattern needs two candles to tell its story. Here you can see first a small red candle. Sellers are still in control. The downtrend continues, nothing usual. Then a large candle appears. Not just any green candle. This candle opens below the red candle low, closes above its high. It completely swallows the previous candle, the body and all. That's engulfing. The buyers didn't just show up, they showed up with force and completely engulfed the sellers in a single candle. How to trade it? Location, bullish engulfing must appear at the support. Confirmation, wait for the confirmation of next green candle, which closes above this engulfing. Enter at the close of this candle or the pullback, and your target is your next resistance. Let's look at the chart. This is your engulfing candle. It appears at support. Next candle, confirmation candle, closes above this engulfing candle. So entry could be your pullback or close of this candle, and target is your next resistance. Next, bullish reversal pattern is a piercing pattern. This one has a very specific rule that makes it unique. Like the bullish engulfing, this is a two candle pattern that appears after a downtrend. But there is one critical difference. The candle one, a big red candle, strong selling pressure, downtrend is still in full force. Candle 2, a green candle that opens with a gap down, meaning it opens below the red candle close. Sellers are still trying to push lower. By the time that green candle closes, it has pushed back up and closed more than halfway into the body of the red candle. Two critical rules to validate this pattern. The green candle must open below the red candle close. The gap down is essential. Green candle must close past the 50% midpoint of the red candle. 4-step trading plan. Location, it should appear at the support zone. Validation, it should gap down and close at the 50%, which it's closing over here. And wait for the confirmation candle. The next candle is also bullish. So your entry is at the close of the next confirmation candle or at the pullback, and your target is your next resistance. Let's look at the chart. So this is a piercing pattern which appeared at support area. Next candle is also confirming that it's still holding the bullish trend. So enter over here at the close of the next candle. Stop loss is at the piercing candle, the low of that piercing candle, and target is your resistance zone. Morning star pattern. There is a 3-candle pattern. The big red candle, sellers are in full control. Then Doji, indecision candle. Third candle, big green candle. Buyers arrive with a full force, close it into the first red candle. Together, these 3 candles paint a complete picture. Sellers dominated, then confusion, then buyers took over completely. 4-step trading plan. Morning star must appear at the support zone. Validate all the 3 candles, big 3 candle, indecision candle, and big green that closes deep into the candle 1. Wait for the 4th candle confirmation. Enter at the close or the pullback of that 4th candle. Stop loss will go the low wick of the indecision candle or below the support area, and target will be your resistance zone. Let's see on the real chart. So this is your morning star pattern. The first candle is bearish, then indecision candle, and next candle which has closed above the first candle. So 4th candle is a confirmation that has closed above the 3rd candle. So your entry will be at the pullback of the 4th candle, And stop loss is at the support zone. Target is your resistance area. Three white soldiers. Three white soldiers, three consecutive big green candles making higher high and low high. It must have a big green candle closes near its high. Soldier 2 open inside the body of the soldier 1, then closes near its own high. Soldier 3 open inside the soldier's second body and closes near its high. Three candles, each one bigger than the last. What does this mean? This signals a powerful buying pressure. Four-step trading plan. So it is best after the downtrend at support. Validate all the three candles. Each must open inside the prior body and close near its own high. No low upper wick, no shrinking bodies. All three must be strong and clean. Check the volume. This step separates from a normal trading person to a professional. Volume should be rising across all three candles. Step 4, entry at the confirmation candle. Stop loss goes below the low of the soldier 1 and target is your resistance. Let's look at the chart. At support, we can see three soldiers over here. Your entry is planned at the pullback. Stop loss is the low of the first soldier and target is your resistance zone. That completes our bullish reversal patterns. Third stage is bearish reversal pattern. We'll look into the most used patterns where sellers can enter. We have covered some powerful bullish patterns. Time to talk bearish reversals. The first bearish pattern, one of the most recognized, is shooting star. Small body at the bottom. Little or no lower wick. And long upper wick. It appears after an uptrend. Here's the story. During that candle, buyer pushed the price way up all the way to the high. But then sellers stepped in hard. The long upper wick is the evidence of that rejection. Buyers tried, sellers won. Three things that make this pattern valid. The long upper wick, buyer pushed way up, but seller rejected it hard before close. Four-step trading plan. Location is everything. So it must appear after an uptrend and at the resistance level. Wait for the confirmation candle. The next candle should be red, close below this. Entry at the close of the confirmation candle and target is your next support zone. Let's see the real chart scenario. Here is the shooting star. Next candle closes below the shooting star and everything happens at the resistance. So entry would be at the third candle. Stop loss is at high of the shooting star and target is at the support. Bearish engulfing candle, similar to bullish engulfing candle. So here how it works. Candle 1, a small green candle. Candle 2, a massive red candle. This candle open above the green candle close. Buyers are excited. But then seller arrive with an overwhelming force. The red candle crashes down and closes below the green candle open, swallowing it completely. Four-step trading plan. Find the right location after a clear uptrend and add the resistance. Step 2. Validate both the candles. Small green first, red open above the green close, red closes below a green open. So if you see here, look at here, this is at resistance and this is your bearish engulfing. Here, how to trade? We'll enter at the next pullback. Stop loss will be at high of the bullish engulfing candle and target will be your support area. Let's look at the real chart scenario. So this is your shooting star. This is bearish engulfing. You'll enter at the pullback. Stop loss will be at top of the shooting star. And target will be at support. Evening star pattern. It's a bearish counterpart of the morning star. So candle 1, big green candle. Uptrend is strong. Candle 2, indecision, doji candle. Candle 3, big red candle, seller arrive with a full force. 3 candle combination signal bearish reversal. Trading plan, spot your evening star at resistance. Enter at the confirmation and pull back. Stop loss will be the low of the indecision candle and target is your support area. So this is your evening star. You enter the pullback. Your stop loss will be at the low of the indecision candle and your target is your support area. Next bearish reversal pattern is dark cloud cover. So it is an opposite of piercing pattern. So first green candle, then red big candle, which has open higher and closes below the 50% of the green candle. So how to trade it? Again, we need to spot it at resistance. Now this is a combination. It's a 2 candle combination. You can spot it over here at resistance. Entry is at the pullback. Stop loss, it has a low wick. Low of the big engulfing candle, dark cloud candle, and the target is your support area. So this is a real chart example. So here you can see your dark cloud cover. You'll enter at the pullback. Stop loss at the low of the bearish candle, and target is your support area. That's all concludes our bearish reversal pattern. So next we'll move to indecision pattern. Third stage in our roadmap. We'll look into the most used pattern where buyers and seller both are confused and waiting for the next candle for the signal. We enter a completely different category that belongs to neither side, a doji. It's unique because it doesn't declare a winner, it declares a tie. It's open and close it at almost exactly the same price. Neither buyers nor sellers could take control. The market is in indecision. There are four types of doji: standard doji, gravestone doji, dragonfly doji, and long leg doji. Doji is not a trading signal, it's a question mark. It's an indecision. So let's see all the doji. Standard doji, open and close near equal. Wicks on both the sides. Pure indecision, neither side won. Gravestone doji, long upper wick, no lower wick. Buyers pushed price way up, but seller rejected it completely and closed it back at the open. Bearish warning. Dragonfly doji, long lower wick, no upper wick. Seller pushed price way down, but buyer rejected it completely and closed it back at the open. Bullish signal. Long leg doji, very long wick on both sides, maximum indecision. The market swung wildly in both directions and ended exactly where it started. How to trade the doji? Standard doji, find it at support or resistance. Doji floating in the middle of nowhere means absolutely nothing. Wait for the next candle. Rule is simple. If the next candle closes green, you look to buy. If it closes red, you look to sell. If buy signal at support, stop loss below the doji low, target is your resistance. If sell signal at resistance, stop loss goes above the doji high, target is your next support. Gravestone doji, buyers push price aggressively higher during the session, all the way up to high. But by the close, sellers had completely rejected that move and pushed price right back down. That long upper wick signals seller takeover. This is a gravestone. This is a bearish warning signal. How to trade? Find it after an uptrend at resistance. A gravestone doji only carries real weight when it appears after a clear uptrend and at a resistance level. Step 2, wait for the next candle to be red. When the next candle closes red, sellers have confirmed they are in charge. That confirmation candle is your entry signal. Enter at the pullback on lower time frame. Step 3, stop loss above the high of the long wick. Target is the next support level. Dragonfly doji. If the gravestone is where buyers got buried, dragonfly is where seller got crushed. Seller tried to their absolute best and still lost. That long lower wick hanging below a tiny body at the top. This is a bullish signal. And here is your 3-step plan. Find it after a downward trend at support. Just like a gravestone needs resistance, the dragonfly needs support. Wait for the next candle to be green. Enter at the close of that green confirmation candle. Stop loss below the low of the long wick. Target is next resistance level. Long leg doji. Price shot way up during the session, then crash way down, then came all the way back to where it started. Both buyers and sellers fought aggressively and neither side won. Step 1, confirmation whether it's at support or resistance. Watch the very next candle. This is where the long leg doji becomes tradable. If it breaks above the long leg doji wick high, buyers won. The breakout is upward, you buy. It break below the long leg doji wick low, sellers won. The breakout is downward, you sell. Stop loss on the other side of the doji. Target is either the next resistance or support. Bonus tips. Candlestick shows you four things: open, close, high, low. Green, buyers one. Red, sellers one. Always wait for confirmation before you jump. Use a stop loss every single time. Start with just two patterns, the hammer and bullish engulfing. Get really comfortable with those, then add more. So these are the bullish pattern cheat sheet. We do have bearish pattern cheat sheet and indecision cheat sheet. That's a wrap on candlestick pattern, your complete visual guide to reading the market. We have covered bullish reversal, bearish reversal, and indecision of the doji, giving you a full toolkit to approach any chart with confidence. Pick 2 or 3 pattern, master them completely. If you find this useful, don't forget to like and subscribe.